Well, thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow first before we come to our markets. And there's a bunch of news flow to monitor. Excuse us for being a bit late today. So Meta shares are up about 10 or 11% on the first sales increase in 4 quarters, which has pushed the Nasdaq futures higher because these numbers came out post market hours, post US market hours, and therefore the Nasdaq was doing well in yesterday's session relative to the Dow, and it is pushed all the other futures higher as well, which is maybe a good thing for from an Asian markets perspective, which are trading a bit soft. Samsung's profit though plunged 95% amidst weak memory chip demand. Oil has erased all the gains since the surprise OPEC plus cut on demand woes, and sugar hits fresh 11-year highs as India cuts the output estimates. Lots happening in commodities as well. But the US markets, Dow and S&P were down. Nasdaq was doing a bit better than, okay, so these numbers actually, so Nasdaq is doing a lot better right now relative to what the Dow and the S&P are doing per se. But even from a markets perspective, the numbers for the US markets, I don't know why our numbers are showing this. There's a bit of an issue here, because the Nasdaq was actually up 0.7%. So excuse us for that. The Dow and the S&P were down, and the Nasdaq was up about 0.7%. The other cues are okay. The SGX Nifty should be trading with, yeah, just a cut of about 0.18%. So circa 18,000, hardly any moves seen there. It's remember, it's a big day for results from the US as well, because Amazon comes out with numbers. That aside, there is MasterCard, there is Intel, which will be important. There is, of course, Snap, Crocs, Domino's, a lot of consumption related things as well coming out with numbers in the US. So it's a big day from an earnings perspective for the US. And it's a big day from an earnings perspective for India as well. Since we're on the topic of earnings, let me pull up the Indian earnings before we get to the trade setup. HUL, Axis Bank, Bajaj Finance, Wipro, Tech Mahindra, so a bunch of index names. And then tech, of course, stays in focus with Tech Mahindra, LTI Mindtree, Emphasis, Coforge. And there's a bit of a pharma flavor to it with the likes of Glenmark as well as Laurus Labs coming out with numbers. Not to forget Indian Hotels, which will be an important quarter from a hospitality trend perspective. Remember, Lemon Tree yesterday was up 5% ahead of its numbers as well. So the hospitality numbers start coming out. People expect it to be a strong quarter. Maybe not as strong as Q3, but expect to be a strong quarter. So that will be watched out for as well. So what's the trade setup for the day? The indices, as I keep on saying, are wedged in a tight range. But as all indicators suggest that there might be some profit booking. Now, could FOMC provide that impetus for the markets to be on a risk-off mode ahead of the FOMC meet early May? I reckon that could well be the case. Rural focused sectors like FMCG and auto are now starting to see some serious traction. In yesterday's session too, I think while the markets were flat, these are the two sectors that actually did well. And the reactions to KPIT and a few other stocks show that participants are very happy to give a strong reaction to even an expensive stock if it is showing growth. The results were okay. The guidance from KPIT, I think, resulted in this uptick that we saw in the stock yesterday. And remember, it's a stock that's trading extremely expensive, but a strong 30% growth guidance, and voila, the market really rewarded it. I think that is the nature of the beast, and maybe that is what we'll see in some of the stocks today. Like, for example, HDFC Life, which to my mind would be a key stock to monitor in the session today, or a Bajaj Finance, but HDFC Life first. And the results were out yesterday, so I'm bringing the brokerage note per se, which kind of lays out what essentially might be the belief of the street. So they are overweight with the target price being up to 700 from 650. The Q4 AP growth at 54% versus the Morgan Stanley estimate of 18% and the consensus at 20%. They say that the Q4 numbers underscored HDFC Life's growth DNA and execution capability. HDFC Bank's stake increased to 50%. Remember, the rules have changed for HDFC Bank. So they say that the HDFC Bank stake increase to 50% should result in a structural business gain. Retail protection has turned a corner according to Morgan Stanley, and because valuation has derated significantly in recent years to attractive levels, they believe this could be a meaningful stock to monitor. They have upped the target price there. No such luck for SBI Life though Nuvama has a buy there with the target price being lowered by about 5% to 1600. The reason being that the AP growth was muted despite a favorable base. And the 3-year AP CAGR is about 16.6% versus HDFC Life's 21.6%. So there's a lot of promise in HDFC Life, SBI Life now for the past few years now, viewers, I must tell you. People believe that this whole SBI bank assurance tie-up will mean that SBI Life will be the leader in growth. Somehow over a 3-year period, they're not quite able to do that relative to HDFC Life. They're better than ICICI Pru, not as good as HDFC Life. And therefore, the valuation catch up with HDFC Life, who knows when it will happen. Uh, though it does have one of the lowest cost ratios, which is adding to the comfort, but Nuvama goes ahead and cuts the FY24 and 25 BNB given the slower growth and volatile product mix. Then the big boy Bajaj Finance numbers came out. NII up 28%, net profit up 30%, gross NPAs come off, net NPAs come off. Most counts, Bajaj Finance ticked all the right boxes at that size, and that is a big thing. And I thought the Morgan Stanley note again, there's a Jeffries note, Morgan Stanley note. I thought the MS note kind of captured it really well. So I'm bringing that one to you. They have an overweight rating with a target price of 8,000. They say that the consensus estimate revisions remain positive. The ROE profile, the key value creation metric, is at a record high according to Morgan Stanley on Bajaj Finance. BAF has raised the loan growth guidance, which is a positive, and the fact that the price to book as well as the price to earning are one standard deviation below the 5-year mean, which is positive, and rates peaking out should be a tailwind according to Morgan Stanley. So maybe you're not able to get the note. Let's move out of this plate at least. Thank you. So the target price is 8,000, and they say that the price to book and the price to earnings being one standard deviation below the 5-year mean is a positive, and the rate speaking out being a tailwind is also a factor that should play in Bajaj Finance's hands. So let's wait and watch. It's a good quarter. It should inspire the NBFC space by and large. Could Bajaj Finance finally be back to winning ways is the question. Morgan Stanley believes so. Let's see if the markets actually give it that credibility. Then Syngene, blockbuster quarter, really. Revenues up 31% to 994 crores. The Bloomberg estimates were 892 crores. EBITDA up 32% at 318 crores. The Bloomberg estimates were 292 crores. EBITDA margins at 32%. The Bloomberg estimate was 32.7%. The net profit up 21% at 179 crores. The Bloomberg estimates were 154 crores. Excellent set of results posted by the company. You can see the increased demand and commercialization of molecules in this quarter, and the fact that Syngene managed to generate free cash flow uptick of nearly 200% to above 300 crores, if I'm not wrong. Let me get the number straight. Yeah, it is 317 crores. Free cash flow generation, clearly improving operating profit and working capital for Syngene. So on most counts, Syngene did well. Now, a lot of experts believe that it will become very aggressive on growth pursuit in FY24. We have the management conversation today. Jonathan Hunt will be talking to my colleague Monal, and it will be an important conversation to monitor. So do watch out for Syngene in the session today. Then Voltas, ho-hum quarter, a lot of expectations around how hot summer and why things should be good. Revenues are up 10%, yes, but look at the cost metrics. EBITDA down 16%. No sign of the raw material cost cool off. EBITDA margin 7.38% versus 9.79%. Net profit down, in fact, 21%. The Bloomberg estimates were 188 crores. They came in at 143 crores. So weak quarter relative to estimates should show up in the stock. Never mind the fact that there's a belief that April, May, June, because of a red hot summer, should be good. This quarter, a big disappointment, very likely may show up in the stock. Very likely that LTTS might be the other one. Now people will compare an ERD company to the other ERD company. LTTS, a lot of promise again, fabulous management, doing all the right things. Somehow the numbers last couple of quarters are not quite showing their revenues. Flattish, 2096 crores. The Bloomberg estimate was 2082. EBITDA margin 21.43, estimates were 20.4. PAT 309, estimates were 306. Not quite there. So LTTS or Larsen & Toubro Technology could also be a stock. Yes, that's the plate. Let's stick with that plate. So LTTS2 left a bit to be desired. I would reckon that the stock could probably have a bit of a corrective move in the session today, though maybe there is promise at the end of the day, but for now, not looking all that great. Let me just see if I'm wrong, And maybe if brokerages believe that there could be something in store for LTTS, I'm just trying to get one of the notes that I saw. Yeah. So there is, yeah. So one of the notes says that there is resilience in the tough macro environment. I think it's Morgan Stanley. They're underway trading with a target price of 3,200. They say that despite positive management commentary, limited upsides to consensus estimate, they maintain relative underweight based on valuation. The growth guidance for FY24 is of at least a double digit, which clearly shows resilience in this environment. So I asked this question to Unmesh Sharma of HDFC Securities yesterday, who was a guest, that can ER&D companies actually do better than pure play IT services? And clearly we are starting to see that in Cyient, in the guidance that KPI Tech has given, in the guidance that LTTS has given. Clearly ER&D companies are doing a shade better or quite better than what IT services stocks are doing. It's showing in the valuations too, but I'm just saying. So watch out for some of these names. Then Shoppers Stop, interesting numbers. Revenues up 29%, EBITDA up 102% YOY, EBITDA margin 16.75% versus 10.69%. So that is also a positive. And the net profit at 14 crores versus a net loss of 15.5 crores. So that is actually not a bad set of numbers per se. However, on a QOQ basis, the numbers looked very wobbly. Sales were down 18.75%. Gross profit was down 14%. EBITDA, 155 crores, as I said, or 154 crores, 154.73. The EBITDA numbers Q3 were 213 crores. So, for a stock trading above 60 times, to come out with a quarter which is so underwhelming, obviously relative to the festive quarter, it would be weak, but a lot more underwhelming. So YOY, the numbers look great, but the reason I made sure that we speak the QOQ numbers is just to give an idea of the scale back in growth that has happened on a quarter-on-quarter basis. Not necessarily the best thing. QOQ may not be the best way to compare, but because it's just bringing out how much of the growth challenges relative to Q3 exist. Just thought it was important to maintain that. Then Oracle is the other one. The numbers optically seem okay. Revenues up 1.46%, just about that. But EBIT was strong. EBIT margins were very strong, 47.15% versus 43.22. PAT up 9.5% at 479 versus 437. So in that sense, a pretty strong quarter. And I was reading one of the brokerage notes, which mentioned that it's a second consecutive year of near $100 million new license wins for Oracle Financial. So good aggression seen in the license wins. And the press release also says that they see their subscription and cloud revenue growing. They're engaged in several strategic client initiatives. Well, the revenue growth is certainly weak. So don't think that that should excite the street at all. But maybe the license wins do. Maybe the EBITDA margin numbers do. So if it reacts positively, you should know why. Was up 1.5% yesterday. It's a very, it's not a stock that moves too much, but keep this in mind. Then a couple of non-result names include a Tata Power and a Rail Vikas Nigam. Tata Power, S&P Global has upgraded the rating for the company to BB+. RVNL, the company has been designated as a Navratna company by the Finance Ministry, and therefore that should also, So Tata Power is one, Rail Vikas Nigam is the other one, Navratna company, and that should help the stock. So do watch out for that one as well. Am I missing something? Let me just take a quick minute to try and figure out if I missed something. So we discussed Syngene. Yeah, IFL Finance was a very solid quarter. So that is great news. And Canfin Homes was a profit beat, but the provisions have risen, which should worry the street. And Voltas, of course, like I said, was a weak number. So not much to talk about. Today, focus will also be on City Union Bank, where Mr. Kamakori has got an extension from RBI for the next 3 years. It trades at a 1.25 times price to absolute book value, which is great news. Let's wait and watch if that one has a positive reaction today. Thanks so much for tuning into the Trade Setup. Have a great day ahead, and see you with a bunch of result conversations today. It's a packed house. So we have Ravi Pandit at 9:20, Amit Chadda at about 9:50, 9:55, Jonathan Hunt a bit later in the day. We have Canfin Holmes conversation with Suresh Iyer and Sudhir Singh, CEO of Coforge. Not to forget that there is also IIFL Finance in conversation with BQ. So a bunch of very important conversations today. You don't want to miss some of these. Thanks so much, as usual, for tuning into the Trade Setup.